Hey, welcome back to today's update, the Phoenix real estate market. Today I want to cover an important topic, one that gets thrown around a lot, and it was a busy weekend. You see, on the weekend, us realtors get together and we like to manipulate all the data so that it only looks pretty and cute and lovely and everybody wants to buy homes, right? I mean, that's obviously what happens, because it's that easy to manipulate millions and millions of transactions, or in a local marketplace, tens of thousands. But in reality, that's not what happens. I know that a lot of the naysayers out there want to see a housing crash, right? I don't know why. If you own a home, do you want to see the value plummet to nothing? And if you want to buy a home, do you then want to see the value plummet to nothing? That's terrible thinking and horrible mindset if you think you're going to buy an investment, let alone somewhere that's going to provide for you and your family. So what I want to cover is who is actually buying homes here in the Phoenix metro. Is it the hedge funds? Is it the big buyers, the big money from corporate America? Or who? Let's jump right into it. So what we're looking at here is we're looking at the market share of mortgage type. So this is what type of financing somebody's using to purchase a home. And what you can see is that right now, all the way on the right side, 25% of our sales are being paid for in cash. Now, that doesn't mean that these are people that have millions of dollars or are run by big corporations or things like that. That could be somebody that lived in a home for the last 20 years, sold it, had an amazing amount of equity, and paid for a house in cash. Maybe they're near retirement. Maybe they made a good choice 5 years ago in a different marketplace. That doesn't mean it's all big money. These are normal people buying houses. Our next category is conventional purchases. So this is like a Fannie or a Freddie mortgage with typically 5% or more down. That's 54% of our market share. Moving down, we have 14% FHA. That's 3.5% down. And then 8% VA. That's pretty awesome. We have a pretty diverse share in the marketplace, and what's even better is typically you'll find FHA and VA. These are home buyers that put less money down. They don't always. VA, I've had VA clients put down 20, 30, 50% down, but it's an amazing product to help our service members get into homes. It's great to see that FHA and VA is starting to gain more market share, especially in the FHA category, because that's typically a first-time home buyer. And I was there once too. I bought 3 houses ago, was an FHA loan. I had come out of a pretty bad financial situation previously, and I needed that because my credit had dropped down to where it really wasn't qualifying for a conventional loan. We all get there. Well, not all of us. Some of us get there. Some of us learn mistakes earlier than others, right? So let's move on to the breakdown of who owns these properties. And a lot of times I hear that there really can't be buyers in this market, right? It's got to be the hedge funds. It's got to be the big money. But you can see here, we're actually getting back into a balanced situation where 73.9% or 74%, if you want to call it that, are actual owner occupied. Normal people that are buying homes and living in them. Not big hedge funds, not investors, not anything of that nature. And then when you drop down, 10% are second homes. Now, are these people with tons of money? Not necessarily. Again, this is a situation where somebody could be buying a home here with equity from a house out of state that they've owned for 30 years or 40 years. There's a whole gamut of people buying second homes. Are there people with tons of money? Sure. But these are still people that own the home and they're visiting to use it. It's not an investor base. Then below that, you see 14.5% investor. What's interesting about this category is you'd want to think this is where all the big money is, right? Well, no, investor is kind of an innocuous term because it's very difficult to break down who an investor is. When you start breaking down public record, you'll find that a lot of investors that buy, say, one rental, myself included, I don't have that home titled in my name. It's titled in random name LLC because it's a business for me. It's an investment, and it should be looked at that way so that I can provide housing to somebody else that perhaps didn't want to buy a house. In that category, again, you're not going to say that all of that is hedge funds or big money or something of that nature. It's normal people too. I'm 40 years old and it took me this long to get to the point of being able to buy an investment property. I didn't buy lots of them with leveraged money or anything like that. This was 20 plus years of working and saving to get to that point. Down below that, you have iBuyers. This is the big money. This is the Open Door and the OfferPad, Zillow, Redfins. These are the people with corporate or hedge fund backed investment accounts that had lots of money to buy. And what you can really see here is it's dropped down to almost nothing, 0.9% of our market, or 1% if you want to round up, where way back in Q2 of 2022, we were at 5.7%, which is way too high for what they're doing, most of which is fix and flip, or even just buy, put a little bit of lipstick on it, and then flip. So now that we know where the market share is, who's buying homes in our market, let's talk about where our market is. Just a quick update here for the Phoenix Metro. What we're looking at here are the active listing weekly counts. Let me throw 2023 up, and you can see that all year long we've been dipping down, losing inventory every week. What that means is that people are buying homes right now. And after the last 2 weeks of the craziness in the market, interest rates have come down and a lot of people have jumped off of the fence and into the market because honestly, a 6.5 is way better than a 7 point anything. If you're buying a home for the long run, you're going to save money. I'm never an advocate saying you should buy now and refinance later because that's not a given, it's not guaranteed, and that got a lot of people in trouble back in the last housing recession. You should only be looking at a house if it makes sense for you, not because somebody else is telling you you should do it now. That's the worst advice I think you could actually give someone. Nobody knows what's going to happen in the market. Look at what happened last year. We had a giant increase in inventory. But when you break that down into perspective to what was happening in years prior, say 19 or in 2018, the inventory was already in those levels. And you can see our seasonal trend is to drop down just like this. So it'll be interesting to see what happens this year, whether inventory continues to drop down seasonally or if we get some giant influx. But we can only see what's there now. And it's important to stay informed with the current data and not just the headlines that we'll see on YouTube. Moving into what's happening with our pricing structure right now, it's interesting to see that we had a dip already in our market here in December, and we've come up all year long. Now, if you're watching the other YouTubers out there talking about the crash, they might be using the Case-Shiller index, which does in fact show what's happened, but it's about 3 months behind. And when you look here, 3 months was over here in December and November. So those numbers are going to look bad, but we are actually picking up some steam here in the marketplace at $280 per square foot as a monthly average sales price, which is up, which is a big difference, right? That's a lot of dollars to add to either your cost or to your profit as a seller. Moving into the seller side of things, it's interesting to see that normally we have a bit of a bouncy market, right? Every week homes come on the market, homes come off the market because they get bought up. And ignoring this one number here because it's Monday, you can see that we finished off week 12 dipping even further in new listings. So these are sellers deciding to put their home on the market and take a risk with what's happening, but this is totally abnormal. When you go back in time and you look at the trends, you can see we follow a pretty normal pattern of inventory bringing up, we seasonally float across, and then we dip off at the end of the year. But sellers are not coming in the market right now, mainly because there's a lot of hesitation and fear, which, you know, I'm not surprised. With all the headlines and all the scariness out there, that makes sense, which is, again, why I'm putting this information out. This is just what it is, and you need to make a decision for yourself, not because somebody's telling you it's good, bad, or indifferent. When you look at the actual Cromford Market Index here, you can see that we have been climbing up through this year pretty gradually, not like any years past, but we're above 100, which is a balanced market as a whole. And we're moving into a seller's market, which is above 110, and you can see 134.6. That's typically considered a seller's market for our space here. And when you break it down to the actual gauges, 134.7, up from 134.6 in the last reading, you can see our supply is down and our demand is down. But our demand is still higher than supply, which gives us that 134 when you divide the two together. Ultimately, I think it's important to, again, remain optimistic about your future and look at the information that pertains to you specifically. Reach out to an agent, reach out to me. It doesn't matter who it is, but make sure they're giving you good data and actual data, not saying that because something happened in the past, it's going to be happening to you here in the future. And they can't tell you it's good or bad to sell now. Your circumstances may be entirely different than what they think is good or bad. So go at it with an open mind. Reach out to me again if you have any questions, and I look forward to seeing you in the next video. Thanks.